My name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of LME 3-month nickel, zinc and tin. LME 3-month nickel. I said 14 weeks ago how the two recent bearish patterns in this market, that is the two bearish shift pitchforks, smaller August 23 based one and the larger mid-June to early August 2023 one, had a very active separation was going to rip each pattern to pieces, and neither would come away from the action unscathed. Well, it happened in late October last year, with prices exiting both pitchforks and the smaller August-based pitchfork no longer being closely involved with the market. Interestingly, after the breakaways, the market started initially tracking down the outside and underneath the broken lower time, currently at 16,775. A procedure I had seen elsewhere in other markets and in other pitchforks. There had been some deviations lower to make a small sideways triangle, for example, but overall prices had tracked sideways to just under this broken lower time. The market even made a weekly key reversal up 3 weeks ago, trying and reaching up to touch the broken lower time, though unsuccessfully. 9 weeks ago I said about this sideways movement of the market, and I quote, "I suspect this seeming sideways movement may not last, as coming in from above we have the declining short-medium moving average, currently at 16,420, which may well apply pressure on prices, cause an action or reaction." Well, 3 weeks ago, when trying to build a weekly key reversal up, the market fiddled with the short-medium moving average and we had a reaction. The market made a reactionary move back down. I'd ask you now to just think, if this is what the declining short-medium moving average could do, imagine what the next, more powerful declining moving average might achieve. So we now have the medium moving average currently at 17,190, dropping towards the frame. The only issue is the market's creating some support just ahead of the 2021 low at 15,665, and I'm wondering if this will be enough to hold prices higher as the medium moving average moves towards it, the market, as does the broken lower time as well. LME 3-month zinc. The big picture here is much the same as it was last year, though this may not last that much longer. You see, we have two competing shift pitchforks here. We have a late May to mid-August 2023 mildly bullish shift pitchfork, which is highlighted in bright red on my daily chart. The market last week breached the lower time and is verging on a break lower, a move all the way down to the October 2020 low at 2282, which coincidentally is also the low zone for the August 2023 move. This is a significant move lower, not just because of the breach of the lower time, but also because of the break below the important 2397 level. To explain this, I'll refer to my commentary from last week where I said, and I quote, "After studying this daily chart further, I'm wondering whether we are in the last stages of possibly forming a September 2023 to date very large triple top. The neckline for this pattern is at the previously mentioned very interesting congestion at 2397, which is seeing the bright red lower time rapidly approaching from below. Hence, I will be closely appreciating what happens down at the 2400 level should we get there." Well, and that's the end of the quote. Well, as I have said and we have seen, the market broke down through both, enough that I feel obliged to consider some potential targets below for a triple top pattern. Thus, the primary target X will be down in the 2268 zone, not too far from where we are now, with a secondary hard to reach target X1 down in the 2130 zone. Okay, so I've spent a lot of time speaking about the immediate pattern. It's now time I spoke about the second shift pitchfork, the larger, very large, May to August 2022. That's right, a pattern that is well over a year old. The May to August 2022 bearish shift pitchfork, which is highlighted in purple on my daily chart. In this one we are between the upper time above, currently at 2585, and the middle time below, currently at 2049, and off the bottom of my daily chart. Seems right now as the larger purple highlighted bearish shift pitchfork has triumphed over the smaller bright red bullish pitchfork. I would just like to emphasize once again how this bearish shift pull, which is now, as I say, well over a year old, I wish to emphasize how it is still working in the overall bigger picture to drive prices lower, despite some more recent moves upwards, including the monthly key reversal up in December last year. But we have also had a dead cross in the last week of the short medium down through the medium moving average, which though is a lagging indicator. LME 3-month tin. Excuse me. There are 3, maybe 4 major patterns here visible on this daily chart. The first pattern utilizes the unfulfilled late July to late September bearish halfway hesitation as part of its structure. And that is the June to October 2023 head and shoulders pattern. It's by no means a great looking pattern, with the second shoulder having quite an extension on it. In other words, the previously mentioned unfulfilled bearish halfway hesitation. However, it had been good at defining the lower end of recent market action with its neckline currently at 21,535. Plus, there is an additional consideration taken into account with this pattern, and that is the September 2023 to January 2024 broken downtrend currently at 23,775. This is the second pattern. So if we take this broken downtrend into account with the neckline, then the action since late summertime last year becomes a bear channel. Recent moves have seen the market push back up from the congestion bands below between 22,895 to 24,155, up over all the moving averages up to highs not seen since early August last year. This emergence led me to the third pattern here, a mid-October 2023 to late January 2024 inverted head and shoulders pattern with a neckline highlighted in dark blue on my daily chart, and that's currently at 26,270. As I said 2 weeks ago, and I quote, "You see, I'm not happy about this reverse head and shoulders pattern. I see myself trying a little too hard to optimize this pattern to the information available. And whilst it looks okay-ish, I am still not happy about it. Hence the moniker of a possible reverse head and shoulders pattern." End of quote. I even went as far last week as laying out some potentials above, not targets. I didn't go that far that time, but potentials up to 28,100 and 28,895 levels. At the start of last week, I seemed right not to be happy about the reverse head and shoulders pattern as prices dropped down all the way to the combination of the medium moving average, currently at 25,000 exactly, short medium moving average, currently at 25,150, and the 50% Fibonacci line, the October 2022 to February 2023 move at 25,020. However, the fall stalled and prices reverted higher, and with some force, creating a weekly key reversal up last week and highlighting a possible fourth pattern that I started describing last week. And thus I quote, "The only new feature I would like to highlight, and did help in also halting the drop last week, so that is 2 weeks ago, is the new late November 2023 to date uptrend, currently at 25,210, highlighted in bright red on my daily chart. I would suggest keeping a close eye on that one, on any moves the market makes towards it." End of quote. Now, the market made no new moves towards it, instead shooting higher and in the process possibly creating a late October 2023 to mid-February 2024 ascending wedge pattern with the bright red uptrend as the lower trend line and a dark blue neckline as the upper trend line. Last Friday, the market broke higher out of this pattern. Thus, we have seemingly potential targets above for 3 of the 4 patterns, which I will now list. For the bull channel, I will formalize the primary and secondary targets of the break higher out of the bull channel. The target on the upside was in the 26,755 area. That target was achieved in late January. For the mid-October 2023, late January 2024 inverted head and shoulders pattern, we have a primary target X in the 28,100 area and a secondary target X1 up in the 28,895 area. Finally, for the last pattern, the rising wedge pattern, we have a primary target X2 in the 28,360 area and a secondary, harder to reach target X3 up in the 29,600 area. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.